What's up, you guys? Happy New Year! This is Paris and welcome to BudgetHolics. This is the first trading week of the year, and with that I wanted to share with you my investing strategy for 2021. Although 2020 was an overall terrible year, it was a great year for stock investors. I had a return of 120%, which I know is not duplicable. If you want to learn more about my best stocks of 2020, check out my previous video for which I leave a link here and down in the description. But keep in mind, I'm sure that I won't be able to duplicate those results in 2021. A lot of my returns for 2020 were due to sheer luck. The pandemic was a lucky break for me, as most of the companies that did good were within my circle of competence, meaning that these are the companies I knew about and these were the companies I was willing to invest in. There is no way this is going to happen again in 2021. And we should all realize that. You making a good investment and having a good return over a month or over a year does not make you an investment guru. As you can see in my previous video, most of my profits came from tech companies that are now extremely overvalued. Moving on from the 2020 overview, let's talk about my 2021 investing strategy. And if you want to be successful in 2021, the first thing you need to do is smash that like button and hit the subscribe button and the notification bell so you can help me help you invest in the future. The first thing I need to disclose is that I am, by most accounts, an active investor. This means that I only pick my own stocks and I do not invest in ETFs or indexes. Tesla's addition to the S&P 500 is just one reason I don't like indexes. I don't have control over the time those index funds are buying stocks. S&P 500 investors bought into Tesla when Tesla was trading for 1,200 times earnings. And the price at which they bought that was around $680 per share. In comparison, I bought into Tesla at $65 per share. This does not make me smarter than S&P 500 analysts or S&P 500 investors. It just shows how you can expect a higher profit when you take the time to do the analysis yourself and you do not have to pay any transaction fees or rely on the rules of the index fund you're investing in. That being said, if you're not willing to do the research yourself, it's better to invest in an index fund than investing in random companies based on random tips from random people. 2021 stock prices and asset prices in general are inflated, and with another stimulus bill on the works, prices are projected to go even higher. More businesses are closing down, unemployment levels are increasing, and more people are losing their homes because they cannot afford to pay for their shelter and their bills. However, stock prices are going up. This disconnect between the stock market and the real economy is due to many factors. The first reason is interest rates. Interest rates being at an all-time low, sometimes even negative, means that you're paying your bank to hold your money. Most investors prefer making money from their money, or at least hedging against the inflation. That's why they're investing in the stock market, cryptocurrencies, and buying commodities. And this very inflation is the second reason asset prices are increasing. People want to hedge against inflation, meaning they want to protect the value of their money in the future. That's why they're buying assets such as stocks, bonds, or cryptocurrencies to increase their chances of making a profit in the future. And if you yourselves take a look at your portfolio, you'll realize that most of your assets are overvalued. Whether that's stocks or Bitcoin, prices are extremely high. This is what analysts and professionals call a bubble. The more you inflate a bubble and the bigger it gets, the more likely it is to pop. And inflated stock prices, a slow rollout on vaccines due to limited supply and limitations in distribution, as well as further lockdowns, are a clear indicator of a stock market crash or at least a correction. If you want to learn more about my thoughts on the 2021 stock market crash, check out the video I made, for which you'll find a link here and down in the description. However, timing the market is pointless. And even for those of us who think a market crash is coming, it would be extremely unwise to just hold on our money and wait for this crash to happen. The reason is that you could lose months or sometimes even years worth of money expecting a market crash, expecting the lowest point at which you can get in, and this can be worse than losing money to inflation. Although having a healthy stash of investment cash on the side for opportunities that might arise, hoarding all your money and waiting for the market to crash is generally a very bad idea. That being said, I should point out I'm not a financial advisor. This video is for entertainment purposes only. Since I'm not in the business of buying overvalued assets, I will take that time to increase my circle of competence, both in terms of asset classes and in terms of assets. My background has given me a good understanding of stocks and other financial products. However, you could and should invest in other assets in order to diversify your portfolio. For the past months, I've been studying up and researching cryptocurrencies, including the technologies behind them, potential applications, and their impact both in the financial world and the real economy. Particularly, I've been looking into Bitcoin and Ethereum, and this year I'll be trying to expand my understanding of other cryptocurrencies such as Bitcoin Cash and smaller and newer cryptocurrencies in terms of market cap. While doing that, I'll keep dollar cost averaging into Ethereum and Bitcoin. If you want to get into crypto, you can sign up to Coinbase using the link below and you'll get $10 worth of Bitcoin when you invest $100 or more in any cryptocurrency. As with fiat currencies such as the dollar, the euro or the yen, you want your currency to be earning interest. That's why I'm using BlockFi, for which you can sign up using the link below, that pays an interest rate of up to 8.6% depending on the currencies you've deposited. You can sign up using the link below and you can earn up to $250 worth of Bitcoin. Another asset I'm starting to look into is real estate, both in terms of physical real estate as well as financial products such as REITs. When it comes to real estate, from what I've gathered so far, it's all about the fundamental characteristics of the region you're investing in. And there are various factors you need to consider, such as gentrification, which is the phenomenon by which a district or a region is renovated and improved for new people to come in, new businesses to come in, resulting in the land of that area increasing in value. Finally, in terms of stocks, as you can see in my portfolio, I'm very heavy on technology. The reason for this is that tech companies are within my circle of competence as well as financial companies, and they were a great asset to invest in 2020. However, moving on to 2021, I'll seek to further my circle of competence to include other industries such as electric vehicles, renewables, and alternative food products. While doing that, I'll keep out an eye for IPOs. 2020 was a very exciting year for IPOs, and 2021 appears to be even better, with companies like Robinhood, Stripe, Instacart having their IPOs in 2021, and recently Coinbase also joining the IPO club. If you want to learn more about Coinbase's IPO and what this means for the stock market, as well as what this means for cryptocurrencies, check out my video for which I leave a link here and down in the description. While keeping an eye for IPOs and exciting new opportunities to buy up and coming stocks, I'll also try to rebalance my portfolio. This means I'll be dollar cost averaging into other sectors while trying to build the dividend income portfolio. I'm aiming for a ratio of 70% dividend yielding companies and 30% growth stocks. And there are companies such as Apple which I'm expecting to overlap. If you want to learn more on dividend investing, check out my video on dividend stocks, for which I'll also leave a link up here and down in the description. A lot of my transactions will depend on the prices of the assets in my watch list. Right now, most of the companies in my portfolio are overvalued, and regardless of what type of investor you are, be it a growth investor or a dividend investor, you should always look to buy at a good price, while rebalancing my portfolio and dollar cost averaging into the market, and while increasing my circle of competence to include other assets and asset classes. I'll also be building a small pile of cash on the side for me to have ready to invest should a new opportunity arise. This is my investment strategy for 2021 and the steps I'm going to take. Let me know what is your investing strategy and what are your thoughts on various asset and asset classes for the coming year. Also, if you enjoyed the video, please hit the like and subscribe button, as this helps me immensely with the YouTube algorithm, and share it with anyone you think might find this information useful. I'm wishing you all to have great returns for this year, and most of all, don't stop investing.